What's happening, everybody? It's your boy Kreative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have planned for y'all today. We're going to be setting up a new strategy. This strategy is going to be based on being able to trade in range bound markets, right? These are markets that trade sideways. These are markets that try to hit support levels but bounce off support levels, right? These are markets that try to hit resistant levels but bounce off resistance levels. When I say support and resistance levels, what I mean is that it's making lower lows or is making higher highs. Now, here at Creative Coder, our aim is to be able to create different algo trading bots, right? And also to be able to create AI agents, machine learning. And I've been doing this since about April of this year, and I really do hope you all like what you're seeing. So if you do have any questions, please let me know. If you haven't already, please make sure to like and subscribe. So this is going to be our vibe coding session number 4. If you haven't checked it out already, our first 3 vibe coding sessions, it really breaks down different algo trading strategies. Today we're going to be building one based off of SPY. SPY is the S&P 500. This is the top 500 companies within the New York Stock Exchange, right? And it's going to be 0 DTE strategies. These are strategies that expire the same day. So I'm going to be building a strategy today using Bollinger Bands, right? Now, Bollinger Bands are something that you may have heard of, you probably haven't heard of, right? Right now, we're looking at Bollinger Bands that's wrapped around SPY, and I'm looking at it on the 1 minute chart using TradingView. Now, before we get into the actual strategy build, right, or the algo build, I want us to be able to understand a few things with regards to the bands, how algo works, right? And then we're going to be using Cursor and Claude Code in order to build this out. So if you do have any questions, like I said, please let me know. But other than that, let's go ahead and jump in, right? So what is an algorithm? So an algorithm or an algorithmic option trading strategy, right, or an algo, commonly called, is an automated decision-making system for buying and selling options based on the rules we design, right? This is turning your trading strategy into clear instructions that a computer can follow 24/7. So we're going to be designing the rules, right, that our bot is going to be running 24/7, watching SPY. SPY is the S&P 500. Like I said before, this is the top 500 companies within the New York Stock Exchange. So now that we understand what an algo is, right, it's an automated decision-making system that allows us to be able to buy and sell options. Now, what are options? Options are contracts that gives us the right but not the obligation in order to buy and sell a stock, right? At a specific price. That specific price is going to be our strike price before a specific date. That specific date is going to be our expiration date. Now, there are two type of options that we're going to be purchasing, right? And these options are going to be call options. Call option is the right to buy the underlying asset, and then we have put option. A put option is the right to sell the underlying asset, right? Now, when you buy a call, when you buy a put, you're looking for one of two things, right? So here's a easy memory trick that I use whenever I'm buying call or put options, right? When we buy a call, right, we want it to be able to go down, right? So we want it. What's it? The market, right? So we want the market. Excuse me. Call. I was trying to do two things at once, and I was disrupted. So excuse me. A cause, we want it, and what's it? The market. We want the market to go up, so we're bullish on the market. When we buy a put, we want it. What's it? The market to go down, so we're bearish on the market, right? So here's an example: a SPY call of 500 lets you buy SPY at 500, even though SPY is trading at 520, because we're bearish on the market. We think that the market is going to go up, right? So now that we understand that, so let's go ahead and jump right into Claude Code, ChatGPT, in order to understand what Bollinger Bands are, because this is going to be the basis of the strategy that we're going to be creating today. And this is a strategy that can survive rangy markets, right? These are markets that trade sideways, right? So let's start there. Can you explain, well, not yelling, can you explain, like on 12, what is a range bound market and how it impacts 0 DTE option contracts? So a range bound market. So imagine a stock market that is bouncing, a bouncing ball that is trapped between the floor and the ceiling, or called the support and resistance levels, right? The floor is the support level. This is where the price keeps bouncing up from here. And the ceiling, this is the resistance level. This is where the price keeps bouncing down from here, right? So a range bound market means that the price is stuck moving back and forth between the two levels, the support and the resistance. It's choppy, it's sideways, no big momentum. It's like the market is grounded and not allowed to go outside it. It's pacing around the living room, right? So just sitting there, just pacing, 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 and not really doing anything. Y'all see? Let me just make it a bit bigger just to make sure you can really see this, right? So how it impacts zero DTE options. Zero DTE options, these are option contracts that expire today. These contracts are super sensitive because they only have hours or minutes to live, right? In a range bound markets, breakouts are rare since prices are bouncing between the floor support levels or the ceiling resistance levels. Calls and puts are often decay because the price doesn't run up enough in time. Premium dies fast. Think of zero DTE options like an ice cream in the sun. When price moves slowly, your option melts before you get to eat it. Sideways markets equals maximum melt, right? Scalps, scalps better work than a big directional bet. And ranging markets, a quick in and out trades or taking profits or reversing at the support and resistance level or mean reversion, right? That's what our strategy is going to be based off of. We're building a mean reversion strategy, right? So, in one sentence, a range bound market is when the price is stuck between two levels. For zero DTE, it usually means faster decay, smaller moves, or scalping or natural strategies outperforming directional bets, right? So, what we're going to be doing, all right, now can you explain BB and explain it the same guidelines like a student talking to their professor? Are Bollinger Bands. So Bollinger Bands in a visual way, we see if the price is normal or if it's stretched too far, right? The middle band, if we're looking at right here, this middle band right here, this blue line and the Bollinger Band, this is the average, right? This average is normally a moving average. This moving average, it takes the prices of the recent period. So I'm looking at a 1 minute chart, right? So what does a 1 minute chart let you know is that let me zoom this in a bit more so you can see it. Each one of these candles represents 1 minute of action between the buyers and the sellers, right? A red candle represents the sellers or the bulls in the market. A green candle represents the buyers or the bulls in the market, right? So, in essence, what we want to be able to see within these Bollinger Bands, right? Now, let's break it down first. We try to tell you what we want to see. So, this middle line here is a moving average. You can use either an EMA, which is the exponential moving average, that is the faster moving average, right? You can use an SMA, a simple moving average, that is the slower moving average. We can use a WMA, right? This is the weighted moving average. This is like the middle speed moving average, right? You can use the TMA, right, which is the triangular moving average. Just take two moving averages, right? So it's a bit faster than the SMA or EMA, but I say this to say is that this blue line represents a moving average, and we pick whatever that moving average is, right? All right, beautiful. Now, the upper line, this, these are created by moving averages and then adding and subtracting certain numbers of standard deviations, right? Usually two. So to me, the top band shows where the price is getting expensive, and the bottom band shows where it's getting cheap, right? So the bands are basically telling us when the bands get tight, volatility is low and big moves are coming, right? Because when it's tight, it's squeezed, and we're expecting an expansion, right? It's going to blow up, right? When the bands are expanded, the market is volatile and is moving fast. When the price is touching or it rides the upper band, this is usually strength. When it price touches or rides the lower band, this is usually weakness, right? So let's go to our Bollinger Band so we can like really break this down, right? All right, beautiful. So again, the middle line is going to be our moving average. We can use whatever moving average we want. This upper line is going to be 2 standard deviations away from the moving average, right? This usually lets us know when an asset is overbought or there's high volatility, right? So right now we're not having any of the lines, I mean right here, but oh, I forgot to explain. Excuse me. You see this wick that's like ridiculously pointing out and just crashing through the resistance line of the Bollinger Band, right? So this is letting me know that there's massive rejection at the support line, right? So again, support and resistance. Support is the lower low, resistance is the higher high. So when we're seeing rejection at the resistance line, right? So the bears or the sellers tried to push the price all the way down, but the bulls came in and then it knocked the price back up. So that's why you're seeing this massive rejection here, right? So when we're seeing the bands being broke like this, we're seeing number one, a possible overbought territory, right? Or it's a possible high volatility expansion, right? So this is the ceiling, right? So if the price is bumps up to the ceiling, we're expecting a bounce down, right? And then if the price crashes through the floor, we're expecting a bounce up, right? So you're seeing how it's crashing through the floor. And the floor or the lower bands is the middle band, subtract 2 standard deviations. When it touches the lower bands, this is a potential oversold or volatility compression areas, right? So the lower bands lets us know, okay, the price has been stretched too far, and then we're expecting it to go back to the average, right? So a mean reversion strategy, what it says is that, okay, the price has been stretched too far either to the support levels or to the resistance levels, and we're expecting it to go back to the average. So we're going to pick what average we're going to use. We're going to see maybe it's going to be WMA, maybe it's going to be SMA, maybe it's going to be EMA, right? And then Bollinger Bands is going to trigger the signal. So it's going to, okay, this is the first thing that happens. And then we're going to need other items to be able to confirm if this signal is valid or not, right? So the first item that is going to happen is the Bollinger Bands is going to trigger. All right, bet this is what happened, and this is how we're able to get the signal to be able to trigger. And then secondly, we're going to use what's called a trend confirmation. I want to see if we're in a bearish or bullish market. If we're in a bullish market, then we're expecting the price to go up. If we're in a bearish market, we're expecting the price to go down. All right. So what we're going to do now, let's go ahead and jump into Claude Code. I'm going to be using Cursor, and with inside Cursor, I'm going to be using Claude Code, and I'm going to be using the 4.5 Opus or Opus tomato at this point model in order to do so. So I want to open up a new project. I'm going to go to our Option Baby folder. This is the folder that we use in order to create any new strategies. So we're going to create a new folder. We're just going to call this ME. I should have just said I'm him. I would have got that too. I mean. And then we're going to open up pie. The reason I do this, oh, you can barely see this. My fault. Hold on. My fault. I thought I did this, but I guess I didn't. I'm supposed to make that a bit bigger so you can see it. I apologize. Yeah. 2 seconds. 2 seconds. 2 seconds. All right. A lot more legible. A lot more legible for you, yeah. And we're going to be using Claude Code. With inside Claude Code, I'm going to be using the 2 seconds. Beautiful. Inside Claude Code, we're using 4.5 Opus or Opus tomato at this point. So as you can see, we're using the 4.5 Opus model. So what I want to do, and we can delete this. What I want to do is we want to start with context, right? So I want to say, what do you know about option algo strats? Explain like I'm 12, like a student talking to their professor. Beautiful. Now we're going to have Claude Code. Now we already had ChatGPT kind of explain this to us. Fibberty gibberty. That is hilarious sometimes with these adjectives that is brought out. Fibberty gibberty. Beautiful. Okay. So imagine you're at a lemonade stand and someone offers you a special ticket that says, hey, you can buy 10 cups of lemonade for $1 anytime in the next week. the ticket is basically an option. If the lemonade price goes up to $2, your ticket is super valuable, right? Because you can buy at $1. But if it drops down to 50 cents, you just throw that ticket away and then you buy at a cheaper price. So option algo strategies are just computer programs that automatically buy and sell these tickets based on the math rules. Here are the main ones dumbed down. Delta hedging, don't let me lose too much money. Covered calls, we're not doing this. So I'm going to jump over this real quick. Iron condors, we're not doing that. Straddles, we're not doing this. This is where we're going to be focused on mean reversion. What comes up must come down, and what comes down must always go back up, right? Like gravity in a sense. So the computer spots when an option looks too expensive or too cheap compared to normal, and then it bet that it will return to the average. The algo part just means that the computer does it faster without any emotions or panic selling at 3 a.m. You can't really sell an option at 3 a.m. So this is kind of, I mean, it depends what kind of option, right? But we're going to be doing 0 DTE options. So let's go ahead and give it more context. All right, perfect. We are looking to develop a 0 DTE SPY algo strat on 1 minute time frame, right? Using mean reversion. We are going to be using BB, which is Bollinger Bands. And we talked about what Bollinger Bands are, right? And we gave you an example how Bollinger Bands work. And then what we're also going to be using, and I'm going to explain it, right? So just give it a second, but I'm going to explain how this works. We're also going to be using a trend confirmation. So I want to figure out if there's bull power or if there's bear power, right? If there's bull power, that lets us know that the buyers are in control, right? It confirms the direction that the market is going. If there's bear power, that lets us know that there are sellers in control, and it confirms which way the market is going. So that's what this script does, right? And I pulled this from TradingView. I found this and I was like, yo, this is kind of powerful. So we're going to be using this from TradingView, and I'm going to have Claude Code explain that. So we're using Bollinger Bands. We're using a trend confirmation plus ADX, right? Average directional change, right? So I'm going to have Claude Code explain all this. We're going to break this down so we can, this is the way we're going to enter our position. This is what'll trigger a put or call or put position. Now let's break this down, how this will work before we get to the other parts of this strat. So if y'all do have any questions while we're building this out, please let me know. Again, mon nom is Kreative, and what I'm here to do in order to help us become a lot better when it comes to algo trading, right? I've only been doing this since about April, so let me shut up. Let me just go to this. Give me 2 seconds. 2 shakes of a leg. Just 2 seconds, 2 seconds. 2 seconds. I forgot to do something. All right. And pin. Go. So you're combining 3 indicators to catch the rubber band snap when SPY stretches too far from normal and then snaps back. Bollinger Band is the rubber band, right? So the middle line is the average price from X candle, right? And X candle is going to be how far back we're going to look. The upper band and the lower bands, okay, this is getting crazy from the average, right? And we talked about how this works. The upper band is going to be the resistance line. The lower band is going to be the support line. When the price touches the outer band on a 1 minute chart, potential mean reversion is coming. The BB power, the bulls versus the bears, who's winning right now, right? How much how much power does the buyers or the bulls have is pushed up from the open? How much does the sellers have is pushed down from the open? And then smooth net average, we take a 5 period, right? Or we take the last 5 candles in order to determine who's really winning. And then we're taking ADX. Is this move even real? It measures the trend strength and not the direction. So low ADX equals choppy, no conviction, perfect for mean reversion, right? High ADX is strong trend. We're not going to fight it. So our logic, I'm hearing, and that's kind of crazy because you're reading, but all right, I'll buy into it. Price is at the lower Bollinger Bands, plus there's buying power, -2, plus ADX is low. We're going to buy a call. We're expecting to bounce up. And then for the inverse, the price at the upper band, plus there's buying power with low ADX, we're expecting a drop, and then we're going to buy a put. So what is your exit strategy? I'm going to talk about that, your stop loss, and any time of day filters. Okay, we are going to talk about and answer questions 1 through 3, but first we a bit more a bit feel a bit lost when it comes to ADX. Can you break this down a bit more and how this works, right? Because this is the first time I'm using it here on the channel. So I want to make sure we really break down ADX, how it works, and how it's going to work for this algo strategy. So if y'all do have any questions, please let me know. We are building this. I would think like building this as a community. So ADX is the average directional index. Think of this like a speedometer for trends. It doesn't tell you up or down. It just tells us how fast it is. Excuse me. It tells us how fast this thing is moving in one direction. So the scale is between 0 and 100. So ADX between 0 and 20, the market is sleepy, is going sideways. This is perfect for mean reversion. This is where we're going to be living, right? ADX between 20 and 15, the market is starting to wake up. So we're going to be careful here. ADX between 25 and 40. This is a solid trend that's happening. We're going to avoid it. We're not going to fight it. Or we can say just allow. I'm going to be using the BB power to say, okay, if the bulls are in control, only allow calls. If the bears are in control, only allow puts, right? So we're not really going to guess it. And I think we can use ADX in order to solidify that, right? So if we have a solid trend happening, so what I want to figure out, okay, which trend are the bulls in control? Where are the bears in control, right? And how we can use it for the strategy, underlying strategy. And then 45 is a strong trend. One team is dominating. Definitely avoid. Why this matters for mean reversion, imagine a playground string. A low ADX, this swing is barely moving. You push it, it swings back easily. Mean reversion works here. High ADX, someone is pushing hard in one direction. If you try to stop it, you get ran over. So example on SPY 1 minute scenario, the price hits the lower Bollinger Band, right? So it's breaking through support levels. And then the BB power, or if the buyers are in control, if the bears are in control, or power is -2.5, it's oversold, right? ADX is 15, the market is sleepy. This is a good entry, right? So we're going to enter because the price is likely to bounce back to the middle, bounce back to the average, right? Scenario B, the price hits the lower band, lower Bollinger Band, then the BB is -2.5. The ADX is 35, strong downward trend. Bad entry, that's oversold, but it just keeps drilling, right? The catch, ADX lag, excuse me, it just takes a few candles to react, so sometimes the trend starts before the ADX catch ups. So a typical filter for your strat is only enter when ADX is less than 20 to 25. But does this click now? Do you want me to explain? Okay, I think this clicks now, so we really understand how ADX works. So perfect. We get it and now have a better understanding. Now we want to talk about the middle band, the average we're going to use. We're thinking between SMA, EMA, WMA, or TMA, or RMA. Let's break it down and decide which would work here. Beautiful. Damn, the OKC is really putting it on the Suns. Like, I thought the Suns was just going to put up a little bit of a fight, but that's not even the case, fam. Like, they're putting it on them, kid. All right. All right, so let's compare these moving averages for your middle band. So the contenders, SMA is the simple moving average. All candles are equal. EMA is the exponential moving average. Recent candles matter more. WMA is the weighted moving average. Linear fade equals newest equals heaviest. Excuse me, subtract newest equals heaviest. Excuse me. TMA is the triangular moving average. The middle candle matters the most here. Or RMA is the runner slash wilder moving average, super smooth like a slow EMA. All right, visual, if you had 5 candles. The SMA, everybody's equal. The EMA, only the recent gets louder. The WMA, similar to the EMA, but linear, right? TMA is the middle, is the loudest. And then the RMA is the smoothest, slowest to react. For 0 DTE mean reversion strategies, we're looking at the SMA is a classic for Bollinger Bands, reliable, can lag, equal weights, old noise, solid default. The EMA reacts fast to moves, many false signals, twitchy, maybe too jumpy. WMA, faster than SMA, smoother than EMA, not standard, less tested, meh. TWMA, super smooth band, too slow for the 1 minute scalping. Nope. RMA, very smooth, way laggy for 0 DTE. So for my take, it's going to be the SMA or the EMA, TMA, and RMA. I feel like I'm in a science class right now, but just follow me. Right, are too slow. By the time they signal, your 0 DTE is already decaying. So recommendation, we're going to start with SMA, then backtest EMA to compare. All right. All right, so for the strat, we are going to backtest, right? We're going to start with SMA, but have a toggle for EMA, and we're thinking starting with a period of 12, and then explain how the STD standard deviations would work for this strat, and where is the confirmation coming from as we build this out. So there's like multiple layers of confirmation here. I mean, even if we want, we can add a volume confirmation, right? But I think that's too redundant. Like I want to be able to keep these rules as simple as possible, but be able to make them as complex as we needed to, right? All right. So perfect default SMA, but we could toggle to EMA, so the period of 12. So let's talk standard deviations and confirmation. A standard deviation is how stretched is the rubber band. Excuse me. A standard deviation measures tell you how far the typical price wanders from your SMA, which is the simple moving average of the last periods of 12. A 1.0 SMA, price stays here 68% of the time. 1.5, the price stays here 87% of the time. 2.0, price stays here 95% of the time, standard for Bollinger Bands. And then 2.5, price stays here 95% of the times. For our strat or strategy, our settings is 1.5 tight, more triggers, but also many false signals. So we're probably going to live anywhere between like 1. Let's keep going. 2.0 standard, balance, classic, and proven. And then 2.5, we have wide bands. Let's look at, I give you what it means. Wide band, lower band, so we can actually like visualize this. So what we're looking at right now, these are kind of like medium band, not like super tight or super wide, like really medium. If we're talking about wider bands, I'm trying to like prove a point. We're not going to, let me just have, so you can see a visual of the wide band, standard band, and the tight band. Because we're going to live somewhere between 1.5 and 2.0, right? Maybe I like 1.3 to start. No, we're not starting at 2.0. We're probably going to start like 1.3, right? So, but I'm going to have Claude Code explain, like, look at the different bands. Matter of fact, let's just jump right here to ChatGPT real quick. Remember, we have multiple. Can you show different visualizations of BB from tight Okay. Of BB. Um, explaining so we can see how this works. All right, beautiful. I'm just going to be bouncing back and forth. Like it'll get it because number one, these are pretty standard, and I want us to be able to understand. So I'm going to let that output. Once it's done, I'll come back. Okay, here we go. Here we go. Here we go. Here we go. All right, beautiful. So 1.5 standard deviations, right? So we see here that the bands are super tight. So what that means is that any little price movement, right? Let me just zoom in so I can like really accentuate it so you can see it. The moving average is 20. That's super slow. So we're probably going to do a moving average of maybe 10, 12. But excuse me, our moving average is 12, right? So that's where we're going to start. So what that means is that we're looking at the last 12 minutes of data and we're trying to figure out what is the average price, right? And then the tight band of 1.5 standard deviation, it lets us know any little price wiggle, right? Either a support or resistance is going to break the bands. It's going to cause a lot of false signals, right? Sometimes it's going to work out for mean reversion, sometimes it's not. So it's just a matter of being able to make sure that, all right, if we're starting at 1.5 or a little bit less, just know that we may get a bit false signal. So what I'm proposing is that we start at 1.2. Yes, being a little bit more reckless, right? I just want to see how the strategy is going to perform, and then we can tighten accordingly. So 2.0, right? So it's a little bit more wide. You see how 1.5 was a lot more tighter. So 2.0 is a little bit more wide, right? So it takes a little bit more price movement in order for us to be able to hit support or resistance lines, right? So when we get signals, we're going to get a lot more conviction, a lot more signals that had follow through, right? Whether it's being able to touch the resistance line and then bounce back, right, to the average, or being able to touch almost a support line, right, and then bounce back to the average, right? So you're seeing here we're having conviction here, right? And then 2.5 super wide bands is going to take a lot of price movement in order for these bands, in order for a signal to trigger. So that's why being able to use that 2.5, it really doesn't work out for our strategy here because it's super conservative. It's going to take a lot in order for a lot of movement from SPY in order for it to move, right, this much in a particular strategy. So that's why we're going to be starting with bands of maybe 1.2, right, 1.3, and then tighten accordingly. So we get it, got it, great. All right, so for confirmation, you stack through all three layers and all three must agree. The price is stretched down, these sellers are exhausted, and then no real trend, safe to fade. And then that's for a call. For a put, the price is stretched up, the buyers are exhausted. Let's make sure this makes sense, right? So the price is stretched up. Why would the sellers be exhausted, right? The price, excuse me, the price is stretched down. Yes, the sellers are exhausted because the sellers are the bears, so the bears are pushing the price down. So that makes sense. Prices stretch it down. The sellers are exhausted. That makes sense. There's no real trend, right, happening. We're safe to fade that it's going to go back up. So it's going to bounce back up. The price is stretched up. The buyers are exhausted. That makes sense because the buyers are the bulls. They're pushing resistance levels. There's really no trend, and then we have a safe to fade. The confirmation strength. Strength just touch. BB weak happens all the time. BB plus power. So all three. This is our strength, right? Strong. This is your entry, right? So we're entering when the Bollinger Bands touch either the support resistance, and then we're making sure who's in control, the buyers and the sellers, and that we're in a low ADX environment, right? So questions, are we starting one? We are starting with a standard deviation. I know how the abbreviation sounds, so I'm doing standard deviation, grow up. Standard deviation of 1.2, starting aggressive. And then we are doing a ADX threshold of less than, let's do 28. Let's do 28. And then BB threshold stick with 2 plus or adjust. And can you explain the last one? the BB power threshold so we get it and can properly adjust it for this strat. All right, beautiful, man. If y'all do have any, oh, this is like super the fuck zoomed in. I just forget sometimes when you're explaining things, I got to zoom in, but then I also got to zoom out. But yeah, if y'all do have any questions, any comments, please let me know. Give me 1 second. I know I keep asking for y'all page, but I'm not gonna hold you. YouTube has like switched up how you do a couple. Matter of fact, oh crap, not there, not yet, not yet. Um, all right, I'm gonna come back and figure this out. Beautiful. All right, I found it. Give me 1 second. I just need to add something, and then we're Gucci. All right, beautiful. So standard deviation of 1.2 is aggressive and ADX of less than 28. Now let's break through the BB power threshold. The buyers or bulls power threshold, how exhausted are the buyers or the sellers? So the high minus the low times 100 over close. This is the buyer strength. And then the inverse is the seller strength. And then the net score is whom's in control, right? Buyers went crazy this candle, pushed the price all the way up. Oh, okay. Strong buyer dominance. Buyers are winning, but nothing special. Buyers are, and then even fight when it's at zero. Sellers are selling, nothing special. And then strong, and then when it's -2, strong seller dominance. And then -3, sellers went crazy, pushed the price way down. So visual representation, the price went up. The price pushed it way up high, but it was rejected. And then it went back to its average. And then for 2.5, I think that's a little bit too aggressive, right? Because a strong seller dominance, I get it. But what we're going to do is start at 1. Excuse me, we can even start at like 1.5 or like 0.8. Let's start at 1, 0.1, and then -1, and then we're going to adjust as we get more and more with the strategy. So that makes sense, right? 1.5, more signals, choppy, low volatility days. 2, standard setting. 2.5. So we're thinking that we are going to start at 1, plus or -1, and then adjust as we move on in the back testing. Makes sense? Now let's discuss the signals for both calls and puts before we move on, to make sure we are aligned and this works for what we're doing here. All right, beautiful. Like, we're having a strategy and it's coming along, ladies and gentlemen. It is coming along. All right, so negative, plus or -1 starting point and adjust from the back test. So for a call, the Bollinger Band, the price touches the resistance, right? Excuse me, the price touches the support because we're betting that the price goes back up. So the price touches the support or crosses the lower band with the standard deviation of 1.2. Again, it's super tight, right? So it's not that hard for the price in order to touch because there's a lot of room for it to wiggle. Then the buyers or the bears or bull power, or the buyers or seller power, is less than or equal to -1, right? The sellers are showing exhaustion. The ADX is less than 20, no strong real trend to fight. And then we're going to enter a call. The price is stretched down. The sellers are tired, no momentum to keep pushing, and then the price snaps back to the average. The put signal is that we're betting that the price goes down. All must be true. The price touches the resistance line, the upper band, and it's super tight with that standard deviation. The buying power, or the bulls, are in control with the greater or equal to 1. The buyers are showing exhaustion. ADX is less than 20, no trend to fight. We're going to enter a put. The price stretched up. Buyers tried, no momentum, keeps pushing. It snaps back down. A quick reference table, okay. Security questions. BB touches. Does price need to close beyond band or just the wick through. So we are thinking wick through. Does that make sense? For this too. Do all three do all three conditions need to be true on the same candle, or can BB and ADX be from previous candles? Can be from previous candles, but limit to a range of maybe max of 5. If that works out, check logic. And 3, um, we're going to get to that. We want to make sure that the entry logic is sound and good before we proceed. Yeah, because like all that other stuff is easy to come up with. Like if you don't have a clear and sound way in order to get into a strategy, like you just wasted your time, big fan. All right, so updated signal, the current candle wicks through the lower band, right? And that shows rejection. So there was a wick through, close beyond, or then wick through, right? A wick through shows me rejection. Close beyond, it just showed me that the price was just lower, right? So I would rather rejection. Maybe I'll have it where we can test it where it closed beyond, but right now I'm gonna do rejection. So the current candle wicks through, that shows rejection. Low equals lower band. The buying power is less than or equal to 1. Okay, we went over all this, or within the last 5. Okay, current or within the last 5, current within the last 5. So this is your trigger. Exhaustion shown within 1 to 2 candles before the wick. The trend strength doesn't flip fast. Recent is valid. Potential issues to consider. If the BB power is less than or equal to 1 4 candles ago, but now is at 0.5, still valid. It was recently exhausted, or still must be no. If that's the case, if that is the case, we must recheck before we enter position. So make sure we can back test this logic to ensure this works before back test this logic, right? So advise, and also we want to have it toggleable. I know that's a weird word, but toggleable, that we can have the wick rejection and the close through, right? So I talked about it here. So close beyond the band or the wick rejection. So the close or the close beyond shit or the close beyond the band. Right now, we're going to start at the wick rejection. Okay, makes sense? Let's talk it out. 121 to 76. Goodness gracious. If this wasn't a basketball game, who would know it? This is just good old fashioned ass whooping. This is just to, what is that? What did they call that? Belt to behind. All right, got it. So let's recheck the entry and a toggleable wick versus close. So let's talk it out. Recheck logic. So step 1, the wick triggers low band. We recheck at that moment. If BB is still at 1 and not just within the last 5 candles, is ADX still less than 28 right now? If both is still yes, we enter. If no, we skip. This prevents entering at a stale exhaustion signal that is already recovered. A toggleable wick rejection or close beyond. So wick rejection, we're starting here. The candle wick closes through the lower band, but it closes back inside. The price tested, but it was rejected, right? And then it closed beyond. It closed beyond the outside band. Stronger stretch, but might be trending. So that's why I don't want to close beyond. That's why I'd rather start with a wick rejection, because that lets me clear and clean, right? So let's go back. Let me show you a wick rejection, right? This is a clear wick rejection, fam. Let me show y'all. We have a couple of wick rejections, right here, wick rejection, right here, clear wick rejection. So a close through is right here, a close through, right? So this could let me know that, yeah, there may be a little bearish turn, but it may turn, right? So if we would have held this position for 3 minutes, we would have had to be strong because there's a little bullish climb, and then it turned for us again, right? So that's why I like for us to start at wick rejection rather than close through. That makes sense? All right, bet. So wick rejection logic, call low, it's a lower band, a wick through, and then reject it back inside. Perfect. And then for puts, it's the same thing, but the inverse. Why wick rejection makes sense for mean reversion. The rejection itself is reversing starting, right? So we're catching the snap back, not waiting to see if it's going to keep going up. The full logic. Beautiful, rejected the wick. We have the buying power as less than or equal to 1. Recheck, recheck. Perfect. All right, we're aligned. So now what we're going to talk about is how we're going to exit the position, how we're going to manage the position, and then what is going to be our maximum hold time for the position. So let's start with our session time. So session time for this strat is going to be 9:54 a.m. to 11:11 a.m. We are only allowing one trade. Am I tripping? Nope. My fault. This is not live. So we're only allowing one trade per day, and we are starting at $100. And if balance is between, or excuse me, if balance is less than 499, can use up to 80% of portfolio balance. If balance is between 500 and 1,000, can use up to 44% of portfolio balance. And if balance is greater than 1K, can use up to 22% of portfolio balance. We are going to use multiple TPs. What is a TP? TP is a take profit. This is the minimum returns that we're requiring in order for us to exit a position of port, right? So the take profit 1 is going to be 24.8%. The take profit 2 is going to be 13.5%, right? And the reason I'm giving it 2 take profits, right? I'm giving it multiple ways in order to exit the position. Our stop loss is going to be 11%. And what is the stop loss? All of our strategies are starting at what? $100, right? So if our stop loss is 11%, if the strategy goes down to $89, do not wish and pray, right? Get us out the position and let us live to fight another day, right? So we're going to get out the position at 11%, and then our maximum hold time is going to be 3 minutes, right? So we have 3 minutes in order for us to take profit at 24%, 13%, a stop loss at 11%, right? Or we're going to exit at 3 minutes at the market. So what we just did, we set up limit orders, right? You just didn't know it. So I set up 2 limit orders and then a limit stop loss, right? Then a maximum hold time, right? So remember I said, what is a strategy? What is an algorithm, right? We're just going back to what we started, right? So what is an algo? An algo is an automated decision-making system for buying and selling options based on rules we design. So we're designing these rules right now. You just didn't know it, right? So this is our limit order. This is our market order. This is how we're going to trigger the orders, right, for a call and put position. So now what we're doing is how we're going to manage the position is right here, how we're going to exit the position. So we are aiming for the higher TP, but listen, we are going to exit, full exit, not scaling out, whichever of the 3 conditions happen, right? Either TP, stop loss, or max hold time closing at market. We will get into option selection and fees, slippage, etc. once we show you the reference backtest. Does this make sense? All right, bet. And if y'all do have any questions on what I'm doing, we are using Spy. We're going to be using Spy to build out this particular strategy. Okay, perfect. All right, got it. The session is going to be between 9:54 and 11:11. We're only allowing one trade per day. And the reason I'm using 9:54, right? If you know, you know. But the reason I'm using 9:54 is because I'm skipping past the first 24 minutes of the market, right? Once the market opens, this is a mean reversion strategy. So we're betting that the market is going to snap back to its average. So I don't want all that volatility. I don't want all the volume when the market first opens. So we're skipping the first 24 minutes of the market opens and we're closing. You're done trading before we get to that afternoon lunch rush, right? That afternoon lunch crash, right? Because then we're too much, that's too reverting, right? It just doesn't make sense. So we're skipping the first 24 minutes of the market and then we're closing 49 minutes before the lunch rush. We're only allowing one trade per day, so we're not revenge trading, either a buy or loss. This is we're going to allow one trade per day. This is our position management, our exit logic, and then wait, quick clarification. You have two TPs, but since it's full exit on the first hit, if you hit TP 3.5 exit, even though you're aiming for 2.4, yes, this is going to make sense. Everything makes sense. Option clarification and fees. Let me show you the reference back test. All right, let me grab the reference back test now. What I need to do is open up another folder, and I need to go to a couple other back tests in order to really run this. And we're going to be running our back test using Python. So what I'm going to grab is a couple of reference back tests in order to show Claude Code now how to do this. Okay, where am I? Where am I? Okay, this is a good one. Let me show you. Let's go. Let's use this one. Are we using Spy here? We're using Spy. Perfect. So this is a good one. And then also want to show you this one. Where are you? Where are you? You're right here. Then, lastly, I want to show how we run our back test and run it super fast because I'm not going to have y'all just wait for days. Which one is it again? That's the thing about having multiple folders. You got to remember which one. Like, okay, I think it's this one. Yep, yep. It is. It is. It is. It is. It is. No, it's not. All right, y'all just give me 2 shakes of a second. I'm pretty sure. Penny for you. Damn, now I gotta remember which back test actually. Bernie. No, y'all just give me 2 seconds. That's the problem. I have a gap fill is trendy. I'm almost certain that it's okay. Here it is, gang. Here it is. Here it is. Here it is. Beautiful. All right. So now we are going to show you 3 back tests. Shit, I should have did 4. Damn it. Damn it, damn it, damn it. Hold on, I need one more. And this one is how we are going to select options. Because I know this one is it. Let me copy. Okay, beautiful. Then I could copy the path. And then what we're going to say, we are going to show you 4 back tests. Bruh, is so you can understand the level of logging we expect of the ending metrics, the detail to instructions, etc. Early worm and mini rev shows you how to use different metrics, and then penny for you shows you how to select the options based on the 6 scoring factor. Now review using grep and awk, then let's discuss before we build out this back test for our strat we're doing here. Again, you are using these as references. not taking anything from the strats. Some things may look similar, but do not confuse it for what we're doing here. Now proceed, then advise before we develop our code. Beautiful. All right, so we're going to have Claude Code do that. What I also need is I'm going to have cursors. I just told you. That's what I'm saying. Sometimes these AI is like stupid dumb. I told it, don't try to read the whole file. Guess what it just did? Read the whole file. I told it to use this grep tool. A grep tool is a quicker way in order for the AI to read the backtest so it doesn't have to read the whole file, but hey, it just wants to use brute force. No shit, it's too large, bro. I told you to read it in sections. Goodness gracious. All right, what we're going to do before we get there is create a folder called backtest results, and within the folder create 2020, 2021, 2022, 2023, 2024, and within those folders create v1 baseline. Beautiful. So we're going to have that AI do this. Let's review what this AI did. All right, perfect. I review all 4 backtests. Bruh, loading, detailed instructions, logging writes both function, closes, verbose, global balance for interrupting, early worm, metric style, comprehensive, monthly, I love it, and then weighted for your 0 DTE strategy, 954. Okay, I love it. I love it. I love it. Okay. Okay, before you see how Bruh's backtest it saves the files, right? We're going to do, I have to close you, thank you. We're going to do the same thing here, but going to save them here. Once that makes sense, then we can proceed. No. All right, 1. So we are using both TPs, right? We are just giving the strat multiple ways to exit. If TP1 hits, beautiful. Make it rain. But if TP2 hits, even great. We are still profiting. Last I checked, we don't go broke making a profit. So we are giving it multiple ways to exit. Check the back test on how we're doing it. Matter of fact, I have this cool way, now I gotta remember which back test does it, of being able to use ATR, which is average true range, in order to have a stop loss. And I really like that. So I just got to find which backtest does it. And I'm pretty sure it's you. Is it ATR? Yep. Okay, it's you. The backtest files will show you how this is done. And also, we are going to update the SL a bit. We're going to take the ATR adaptation from mini revert BT and use it for our algo strat. Make sense? Lay it out before we proceed. 2, yes, it is the same place. 3, yes, the same for now. We'll adjust once we backtest. All right, damn, that was a lot. That's why sometimes I wish they could be vocal. I mean, I know you can use Whisper and like other AI in order to do it, but I don't want to get rid of that muscle, being able to type. I know it could be better with regards to spelling, but that's the great thing about AI. It is intelligence, but don't forget the artificial part. All right, beautiful. File saving, same thing, CSV metrics. I love it. Exit logic. exit 100%, exit 100%. Both act simultaneously. Whichever hits first, we take profit and we run. Then stop loss. I love it. 11 gap. Okay, calculate stop loss. This SL adapts to based on volatility, but we never exceed the 11%. Data pass. Same for penny for you. All right, full configs for our strategy. Look at this. It only took me damn near 60 minutes to create it, but I still love it. So let's see how we go, right? Perfect, 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 perfect. All right, let's build it. What should we call this? I'm gonna call it Wicked Wicked. Wiki Wiki. Wiki BT dot P, just Wiki BT Wiki baby BT dot PY. If you know, you know. All right, bet. Again, make sure we have the same level of logging, same metrics for when the backtest is completed, same doc strings, right? Make sure you explain strat at the top, different, and y'all going to see what this makes sense once we actually get there. Different analogy that is creative and out of the box. Now proceed. All right, so let's look at one of our back tests. This is another back test that I've created. I was just working on a few things, and I think I created this maybe a few weeks ago. And this is a back test that does 0 DTE Z-score mean reversion. So it's still a mean reversion strategy, right? When the price stretched too far from the fair value, it snaps back. This strategy uses the Z-score for, okay, why are you spazzing? I feel like it's spazzing for no reason. You shouldn't be spazzing, fam. I just want to read. You're working, I'm working. So let's work together. All right, beautiful. I think I'm just going to stop there. All right, so this strategy uses the Z-score in order to price the relative to the linear. Okay, say that again 5 times fast. Excuse me. This strategy uses the Z-score of the prices relative to its linear regression line to identify when the price is statistically stretched too far from either direction. So the Z-score equals the close subtracts the linear regression divided by the standard deviation. So think of the rubber band as the linear regression is the center. So in essence, it's like a Bollinger Band, but not really. But let's keep going. So the linear regression is the center, the fair value. The standard deviation is how far the price is stretched from its normal. The Z-score tells us how many normal stretches we are from the center. The Z-score is too extreme, the rubber band snaps back. So the core concept, this is how it works, the fractional basis. Where did the price bounce before? A fractional is a reversal point, is a low surrounded by higher lows, a visual of a fractional low. So this is the fractional low, right? A low surrounded by higher lows. We identify these findings, and at the candle close, we're able to still allow this to go. So this is how this strategy works. I feel like I'm talking a lot, but in essence, this strategy does use the BB filter, right, to confirm the confirmation, because I found this to be extremely valuable. So this is how we enter the position. So the previous price action, the fractional basis formed here. This is the basis level. The price dips. This is our entry zone, and then we're able to enter a call as soon as we see a bounce coming. This is a put. We're able to enter a put as soon as we see that drop coming. So what I'm going to do is just allow this strategy to go. If y'all do have any questions, please let me know. Again, my name is Kreative. Here at Kreative Kodr, our aim is to be able to create different algos, right? Different AI agents, machine learning, which I'm going to be introducing into these strategies in a bit here. I don't want to overcomplicate it because we really don't need machine learning right now. It just adds, it's a luxury. It's not a necessity. But I'm going to be adding it soon because that's one of the places where I started my coding journey, is being able to create AI agents and machine learning, because I thought I wanted to be AI software engineer. The OKC really put it on the Suns today, and I was not expecting that. But nonetheless, all right, enough about me. Let's go ahead and get our terminal ready in order to run Our back test, I'm going to load our conda environment. How do we know we're not in our conda environment? Because it says base here. So I'm going to load our conda environment. Option baby. Now we're in our conda environment. Now I'm going to get the file name. I'm going to cheat there. Python file name. Perfect. Oh, you know what I forgot to tell it? Is the speed. I hope it still picks it up. Like, because sometimes these back tests could take a little bit. So I would say just give it another minute or so for us to be able to actually get the file. While we're waiting, do we have any questions, right, on what made me choose SPY? SPY is the S&P 500. Okay, I can stop talking. Lord of mercy. Fishing analogy, that's where you went. Imagine you were ice fishing on a frozen lake, ice fishing, bruh. The candles that dare to wick beyond the band shall be humbled back. That's funny. Imagine you're ice fishing on a frozen lake and the lake has boundaries. The ice is only safe within certain limits. The fish, the prize swims around inside the safest of zone most of the time, but sometimes a curious fish swims too far towards the edge. So let me just start the back test because I know it's going to trip. It's going to take for it a bit. So what is a back test? A back test is being able to take your strategy, drop it off in a time machine, and we're going to see, okay, perfect, it's going to be fast. And we're seeing how well it performs in a particular year. The reason we backtest our strategy because we want to see how well it does on historic data. Now, if a strategy does well in the past, there is a high likelihood that the strategy will do well in the future. There's no guarantee. There's never no guarantees in trading, but there's a high likelihood that it will do well in the future. So we're backtesting our strategy on 2024, and I want to see how well it performs. This right here tells me that the strategy is way too strict, way too strict. Like we're requiring way too many things, right? Let me just wait till March. All right, bet. What I want to do is we're gonna close. You see, we have no trades. This is why we have no trades. The strategy is way too strict, and then we're just going to calmate it down a bit. Review, and we noticed that the strat is way too strict. How can we make it more aggressive? Review and let's discuss. 90 days. I'm not going to go through the whole back test for us to have no trades. I mean, maybe we would have caught one. But what's the point? 90 days, no trades, and after day with hundreds, that's your first trade. I mean, I'm not going to hold you. Still great. You're right. 0 trades in 45, 90 days. But whatever. Who's counting? Means that the filter is way too strict. Let's diagnose it. Actually aggressive. The wick band requires both. Okay, must be exhausted. The proposed loosening. Okay, 0.5 instead of 1, 0.5. I mean 0.5. ADX threshold, allow more trending conditions. BB touch, not just rejection. Just touch, not the require close back rule. Okay, recommendation, we're going to make this a little bit more aggressive, right? Instead of 28, we're going to go to 35. Anything less than 40, like I'm okay with, right? Because anything greater than 40, right? Anything greater than 60, but to me, anything greater than 40 is letting you know you're going in a strong trend direction, right? And I don't want strong trends for mean to reversion because we want to snap back to the average. Like I don't want to build up, right? Okay. So I'm fine with this. I'm fine with this. We are fine with going to, let's do negative 0.3, and then positive, and then 0.3, and then ADX of 38. What else? And then standard deviation. No, let's keep everything. Let's only do 3 things. Like I don't want to keep do this. And keep everything else the same. All right, so we're making our buyer power, buyer bull power like a lot more aggressive. And then I'm allowing just a little bit more trend, just a little bit more, right? 40 is really my cap. So let me just like run and get there real quick and see how it works. All right, so let's run it. Oh, so let's see if it worked. You're being hard headed. You ain't just listen to what I damn, you made me do all that work just for you to go there. That's crazy for you, kid. That's crazy for you, kid. All right, so our back test is loading. Again, if you do have any questions while we are running this, please let me know. Let's see if we get more trades out of this. Oh, still too tight. Y'all see this? Still too aggressive. All right, I'm gonna go to June now. So I'm gonna wait. I'm gonna give it 6 months. And that's crazy, right? But again, I just want to prove a point. I'm gonna give it 6 months. If we see no trades in 6 months, like we got to get super aggressive. And again, I can appreciate it because it only wants high quality trades, right? It has to be something that we're missing. We're in May. I think there's not going to be any trades, but I just want to prove a point. Like we waited 6 months, bruh. No trades. Oh, right on cue. That's crazy, huh? Still no trades, bruh. Review. Still no trades. Let's discuss. And sometimes we're going to run into this, right? Where we have to optimize live. Debug signal. I love it. I forgot we did have that. I'm kind of smarter than myself sometimes. And then we're going to run it and see what the hell is actually happening. My suspicion is likely the wick rejection is too where the price wicking through and closing back is uncommon. Oh, wait, hold on. We just want the price to wick through and not for right now. It doesn't have to close back. Just wick through is fine to start. Is that where the confusion is? Let me just run this also just to be able to see. Because I really think JIT is tripping right now. Um, yes, that's the issue. Right now the code, okay, damn it. No, I still want it on. Let me look at it. I think we just updated. I don't know if we're gonna impact it. Right now the code requires both a wick through and the close back inside. Bro, I told you, and or not and. Okay, shit, that's a lot. I don't know how many days, but this is a lot. This will probably give you a lot of information. Um, this is before the update review. And let's discuss. Or maybe it's like it caught it. I don't know. Sometimes the code. Now I see the issue clearly. The BB powers are hovering around zero, like 0.1 or 0. Oh, 0.00. Nowhere near the zero 0.3. The BBs are mostly 0.8 to 0.4. The formula is producing very small values on the 1 minute SPY data. So lower the threshold. All right. Let's lower to the negative 0.1, plus or minus 0.01. Let's go to 0.01. Let's go ahead and make that happen. All right. Let's see. Now we're finally about to get some action. It only took 3 versions of it. Sometimes this happens in coding. I'm not going to hold you. Sometimes you just got to like live debug and live just fix things. So that's what we did. We fixed it, and now we should be ready to go. But y'all see, once the back test loads and ready to go, it's ready to go, right? But it's loading 10 million data points, so it takes a second. But once it runs, it runs. Okay, I don't know if we're getting positioned, if we're not, bruh. This is a lot. I don't know what's happening. I think we may be getting positions. I think maybe not. I just really don't understand what's going on. Okay, here we go. All right. So the strategy just worked out shite. All right, now we could talk about something. Now we could talk about something. Um, review and make sure to review the CSV text and other files using grep and awk terminal commands. Do not read the entire file in one go, fam. Read, then let's discuss. All right, beautiful. So okay, finally it's using. Again, what is grep and awk? Grep and awk is a faster way in order to read a file without having to read the whole thing. So you can read parts and clips of the file, right, without having to read the whole entire file, and you still get the concept of what's going on. So right now it's looking for the entries, the exit, and the total profit and loss, to be able to understand what happened, what worked, what didn't work. Then once we figure that piece out, then we're able to adjust the strat, and allow us to make sense. All right, perfect. Claude is about to perusing, give us an output. The problem is that meme reversion isn't working. The price is going against us. So the time stop, the price never bounced back in 3 minutes. The price is drilling against us, 0 wins. Let's talk about it. So the entry always down, even calls are expecting to bounce. So the entry, call, okay, the price wicks through, but the price keeps going, no reversing. The session might be wrong. Most trades at 9:45 and 10 a.m. This is the momentum trend. So flip the logic. Let's do and that's the thing, bro. Like, and I'm going to show y'all that momentum always works, but like I want to be able to figure out this mean reversion, require close back, original wick through plus the close back inside, add RSI, that's too much. Tighter Bollinger Band right now, most extreme stretches. What is your gut saying? All right, let's stay. Let's put eyeballs on it real quick. Let's put eyeballs on it. And that's the strategy. That's how it works. We're going to go over that, but right now we're doing optimization. Oh, holy shit! This is the here in turn is our fucking problem. ADX of 14 is 14 minutes, bruh. Let's do ADX of 5. And let's go back to 28. Bollinger Bands. Let me drop this. Let me drop you to 8. Sometimes you got to dry the boat. 5. Okay, let me keep everything else the same. I think this ADX at 14 was the big issue, right? So what I want to do, let me just dry the boat. Let me see what's up. Who y'all have? The Lakers or the Spurs? I'm not gonna hold you. I got Luka Magic. But I could see Fox doing his thing too. All right, so we're running our back test. I just updated a few things because I noticed that the ADX period was 14. Again, super long in order for us to be able to figure out a trend. I mean, I get it, but then I don't. And here, oh shit, I was supposed to take the logging off. All right, trending. Okay. I mean, I was supposed to take this part off, but I didn't. We kept it. That's fine. We can actually see what's working and what's not. Just give it a second. Nope, I can't even stop and try to drill down. Y'all just give it a second. Okay, we're seeing that 28 is probably too much. We're trending damn, and this is 2024, right? I get it. 2024 was a trending year. Um, I think I'm gonna go back to 2022. If the strategy could survive 2022, then I can make it work in the other years. Because why make it? Yeah, that's what we're gonna do. We're okay. Holy shit. I'm not going to go through all that. It was just that March. Okay. This is what we're going to do. This is what we're going to do. Strategy is too good for me not to. I'm going to go to 10. Then I'm going to go to 38. Then find 2020. Okay, so I can just put it in the name. Okay, perfect. So I'm going to do is copy. Oh, debug. If I can spell it right, debug. False. Bam. Holy shit. Yo, GD, how we doing? How's everything been? I hope you've been well. Oh crap. Let me. I hope you've been well. I hope all has been going your way as far as the market and trading is concerned. I decided to switch it up and stream a little bit later. Maybe be a little bit of a night owl, and to see how well we can get this mean reversion strategy to work out. But again, I hope you're well. I hope everything is going well for you as far as algo trading like this week. Okay, hold on. So I'm seeing some things. All right, so the strategy is like damn near passing out in January. Let's take a look at what's going on. Oh, that's what I forgot. My fault, y'all. I forgot to put 2022. Python 2022. So we're doing a mean reversion strategy to be able to see how well 2022 perfect. We can have this algo being able to trade averages, be able to snap back to the mean. So I'm interested to see how this is going to work out. And I'm going to trade on 2022. This is a super bear year. The strategy is still dying. All right, I'm missing something. I am missing something. Hold on. I'm just gonna run it on 2024 real quick. I'm gonna run it on 2024 real quick. Give us a second. All right, bet. Now let's talk about it. Now let's talk about it. Review what we updated, and then let's discuss. I think we're going to go do it. Again, I'm not going to make this a long session. If I have to, I know what I have to do to be. Hold on. Okay. Flip the direction. Go with the wick, the momentum style, right? Close back required, true rejection. Oh, shift to a later session. The strategy is fading the momentum at the wrong time. When the price wicks through the BB 945 to 1140, it's often the start of a directional move, not exhaustion. Okay. You know what? Let's try this. Let's flip the direction and gauge how well it performs. Let me just try that. Sometimes you got to go with the wind, right? Let's go with the wind. If we're finding true momentum plays, let's see if we can catch this momentum play real quick and see how well this performs for our particular strat. Right? So it's the same logic, but instead of betting that it's going to go back to this average, we're betting that it's going to keep going. So let's see. Anuwa, as the Zos would say. Let's see how well this will perform. And I'm going to be running it on 2024. This is the bulliest of bull years, right? So if we're able to catch a great momentum play, to have our strategy. Ooh, it's still passing out. I don't know. It's like, all right, let's put some eyeballs on it. If this is momentum, right, we could start a little bit earlier. If this is momentum, right, we could end a little bit earlier. 44. This is momentum, so we can require that not to be as thick. Let's go back to 12. Um, let's keep that where it's at. Let's go back to 8. This is momentum, right? So I want ADX threshold, so we can really increase this a bit. ATR stop. Okay, we're gonna keep that the same. All right, bet. So now let's run it. Momo, right? If oh crap. I was trying to be fancy. My fault. There we go. There we go. Why'd you when you coded from Schwab? Wait, when you code from Schwab, you whose MCP do you use? You own or something from someone else? I use Claude Code. Hold on. Shit. Give me 1 second. I'm just trying to figure out how these pieces go together from what sources. I use Claude Code, and that's what I'm using right now. This is this MCP, right? In order to code our back test or whatever I need to code, I use Claude Code in order to do it. I mean, there are others out there, but when it comes to like top of the line, I would definitely recommend any Anthropic project when it comes to coding, because they figure it out, they get the job done. Because I found with OpenAI, sometimes even with Gemini, right, you have to re-explain yourself, and sometimes you found that the code that starts off good and well intentioned ends up going to shit, right? So that's why any MCP that I use is going to be Claude Code, and specifically I use the Opus 4.5 models. Sometimes I'll bounce between the Sonnet 4.5 model, right? It's tomato at that point, but lately I've been sticking with the Opus 4.5 model. I hope that answers your question. Review and let's discuss and see what we have done. We want to update the strat to reflect momentum / breakout and not mean reversion. Bro, I'm going to catch this mean reversion. It's just a little bit too slick right now. And I'm going to give y'all a strategy, right? We just started. I mean, yes, of course, I can go to what you changed earlier, BB wider. Okay. Low winning rate, but winning one. Yeah, no problem. Again, I am going to have a video on how I set up my entire project, but I'm just waiting on one particular thing to come through. And as soon as I get that, I'm going to create that video so you can see on my setup how I get my data, how I download it, how I create the files, so you can really get your setup in place. Puts are performing the calls. So change maximum hold time, give momentum more time to develop it. Don't need that. No. Tighten the BB to 1.2. Let's go look. Let's put eyeballs on you. Let's put eyeballs on it. Bollinger Band right now. So let me use EMA. If I'm going to use EMA, then I'm going to use EMA 8. No, EMA 5. That's okay. And then I'm going to start at 32. Let me say 68. And then go back to 10. I'm going to drop it to 2 actually. Yep. Yep. Okay. Now check. Check that we have updated to EMA from Discord is coming soon. I'm still that's what I'm waiting for actually to finish. I'm working on my Discord right now, but the Discord will be coming soon. So I would say give me another. I'm not gonna hold you. Just give me to the end of the year. I hope it'll be there before the end of the year. But again, I am working on that. I just haven't had time to really dedicate to it because all these different ideas for strats that I just want to get out. But the Discord will be coming soon. And I have a couple other social media platforms coming soon. But just wait. By the end of the year, I promise GD is going to be here. From SMA, and make sure we have properly updated parms to be a bit more quality and aggressive focused. All right, let me check. We are using, oh, you know what? I can use TMA now. I'm gonna get back to that. We're going to get back to that. Configs confirm, EMA updated, calibrated, allows trending conditions, shortened, earlier, wider, stronger breakouts only. Yes, bruh. Trust me. Just follow me, bruh. Just follow me, man. All right. So what I'm gonna do? Let me just drop this to 1.1 real quick, and then I'll give you 4 minutes. I'll do 1.1, and I'll give you a little 4 minutes. All right. Let's run it. Let's run it, and let's see. Beautiful. All right, rerunning the back test. Now we're going to see how well it's going to perform based on what we've done. All right, I'm not going to hold you. Sometimes we have to go swimming in different waters, right? So what I want to do is I want to come back to our trading view, and then I'm going to click on indicators here, right? And then what I'm going to do, indicators, is going to zoom in a bit more so you can really see that. And then what I'm going to do is I'm going to hit, now we have a breakout. There's this squeeze. You know what? Oh, I thought I seen it. Okay, hold on. Give me 1 second. Squeeze mean. Let's put mean. Matter of fact, let's just switch it up. Let's just go to squeeze. And you'll see what I mean. Just give me a second. Squeeze variance. And then what we're looking for is a different start, right? So I'm going to be just scrapping what we've done, and I'm just going to start a brand new strategy, right? Because that I just need to take under advisement. And sometimes that happens, right? Not every strategy is going to hit because I created it live with y'all. So we're just going to take that under advisement, and we're going to start over. So squeeze momentum strategy. And then we have 2 with TTM. MSCC strategy based off squeeze momentum, Bollinger Bands with mid. Okay, this is interesting. I mean, kind of sticks with the BB. So let's do that. So Bollinger Bands with a squeeze alert, right? So it has 812 individuals that have used this. What I'm going to do is click on source code. Source code allows us to be able to pull up the Pine code, the Pine script, right? So I'm going to click on source code. So I put squeeze and then I scroll down and I found this one. So this looks like a play that could work out for us. So I'm going to click on the source code and here's the strategy, right? This is a comparison back for the squeeze detection. Super simple. The length 20. Okay, so what I want to do is take this, go over to Claude. All right, we're starting anew, scrapping that strat and starting over with the following. Explain and then let's discuss. So still going to be Bollinger Bands, right? We're still going to keep that concept, but we're just going to begin anew and create this strat brand new from scratch. Again with Claude Code, but you saw that I just started it from trending view. From okay, so how this works. So this is a Bollinger Bands with a squeeze indicator, completely different approach. Let's break it down. So the Bollinger Bands width, right? So it measures how tight the Bollinger Bands are. When the bands squeeze together, it signals low volatility and often precedes a big move. A high BBW, that is funny. The bands are wide apart and equals high volatility. Low BB dub, the bands are squeaked tight and then low volatility. Squeeze alert, the BBW is lowest point and 125 bars equals the explosion is coming. So this is how it looks visually. 125 bars low, BB squeeze. And then BB dub is at its lowest point at 125 bars. The funk Sisha background price is coiled like the price ready to spring. How we use it, we detect the squeeze. The price is at the 125th bar low. We wait for the breakout direction. We wait which way does the price break, and we enter with the breakout. Call if it's up, put if it's down. Questions, which time frame? So we hold on. So we are going to use 1 minute time frame and need to adapt this to our strat. So of course, our process. So of course, using 125 bars isn't going to work here. Needs something that is closer to 15 or 12, right? That still does what it needs. And also, how do we determine which direction? Two, based on the direction of the price movement, right? We're still going to use the BB power that we used before to confirm it. Think that is valuable to keep. The session is going to be from 9:31 to 11:08, and we're switching. I'm going from. I'm going to keep SPY to 11:08. Let's quickly discuss before we build new backtest. All right. Perfect. And again, if y'all do have any questions about what I'm doing, I kind of just pulled a little audible, right? Blue 92 said hut, right? A little audible in order for us to get this work in. So core idea, we detect the BB bands are at their tightest, the coil test spring, and then we write the breakout direction. So the period is 20. We're not using that. That is way too long. So I'm probably going to go to 10. And then the BB 2.0, I just showed y'all the pictures before, right? That is too wide. I want it a little bit tighter. The squeeze look back, adaptation for 125 minutes. The BB period, kept from the previous to confirm. All right, 12 bar, beautiful. Okay, hold on, a few things. BB period is going to be 10. Let's do 12. Let's do 8. BB standard deviation is going to be a bit tighter. Let's start with 0.88. Yes, 0.88. And then squeeze, look back. Let's start with 12. No ADX. And then keep the same TP and SL with the ATR. Makes sense. Ready to code. Beautiful, beautiful, beautiful. All right, ready to code. Building now. You don't even know what I'm going to call it. Oh, so you're just going to update. No, don't update that file. Instead of updating that file, let's create another one. Let's call it BB Rider bt.py. Yep. .py. Beautiful. Yeah, that's what I thought. Beautiful stuff. Beautiful stuff. All right, so we're having this back test created. While we're having this back test created, if y'all do have any questions about my process, about why do I use 4.5 as opposed to Opus, that is, as opposed to Sonnet, you can ask now. Let me know. I am here to help as best as I can, right? It's not to say that what I'm doing is I'm still new in this, but what I'm saying is that I'm consistent with this, right? So there's a lot of work that I'm still going to I question like, I didn't know that, or that's an interesting point, right? And again, and I'm open to feedback. And this is a little bit of a later session. I'm not gonna say I'm gonna go off the rails, right? Like I'm still gonna keep it respectful, and I'm that's why I'm waiting to create a strategy and then have this strategy actually work. I feel like I'm just talking to talk at this point, right? So I'm just gonna be quiet. I'm gonna wait for this back test to actually be created. Then once it's created, we're gonna run it, and it's gonna be fantastic. So I can't wait. So what's happening right now is we're waiting for the back test to finish up on our new strategy we just created. This is for a Bollinger Band squeeze strategy, right? So it allows us to be able to take advantage of the breakouts that we've noticed for using Bollinger Band. So that's why I kind of flipped it from mean reversion to being able to use BB or Bollinger Bands for breakout or momentum plays. So we're going to see how well this works. We're keeping everything pretty much the same from our previous strategy, right? So I'm keeping the buyers or bears and bulls power. So this lets us know who's in control. Is it the buyers or the bulls, or right, or the sellers or the bears? ADX allows us. We're not using this, so I'm taking that out. We have two take profit levels, and for our stop loss, I got this from UGD, right? Our stop loss, I'm using an ATR based stop loss, but I still have a cap, right? ATR is average true range. It lets us know what direction is the price going in, right? But again, I still have a cap because I still wanted to be able to say, hey, you can go based off where volatility or the price is taking you, but I'm going to cap it to 11%. And then this position has, or this strategy has 4 minutes to being able to either take profit at one of these levels, stop loss based off ATR, or the fixed stop loss, or being able to get out at the market. This is how we enter the position. Either it's going to be a call or a put. And now I'm just waiting for the backtest file to actually finish. So once that backtest file finishes, we're actually going to run our backtest. The backtest is going to be ran on 2024. What is a backtest? A backtest is being able to take your strategy, drop it off in a time machine, and seeing how well it performs in a particular year. There we go. I can stop talking. I thought I was going to need to keep going. All right, we're running our back test. Again, running our back test on 2024. That's funny. That is a bull. That is a bull. BB Rider. It should have been a cowboy. Whatever. We're running our back test on 2024, and I want to see how well it performs on 2024. If it does well in the past, then there's a high likelihood that the strategy will do well in the future or on present data. All right, so let's see. And it is shitting itself, ladies and gentlemen. All right. What I want to do, are you back yet? No. All right. Nope. It just cropped the bed. So let's take a look at what's working. Calls are not working at all. Puts are working. So why isn't calls working, right? Why don't they have conviction? Let's go ahead and copy. And let's find out why calls do not have conviction and what we're missing here for this particular strat. All right, I did it. I ran it. Review, and let's discuss what is happening here and what we can do. Maybe different filters for calls versus puts. What is the data telling us so far? And we're going to see how well we get this. All right, so the put outperforms the call significantly. Puts have a 22. That's not, 22 to 0. I get it. So Mondays are profitable, 70% exit on time. So squeeze breakouts are going down more reliably. Bearish bias for this period. The call after a squeeze aren't working. The false breakouts to the upside. The 4 minutes may be too short. The price needs more time to move. I don't believe that. Asymmetric filters, stricter for calls than it is for puts. Lower the TP or longer hold time or Monday trading only. No, I'm not doing that. So this is what I'm going to do. Roll up my sleeve and let's go look at the strategy itself, right? Let me increase this to a longer period. This really should be EMA, right? Squeeze look back. Let me drop this to 10. And then what are we going to do? I'm going to keep everything else the same. I don't know why I just went country there, but it is what it is. All right, save. All right, let me get, I need a command real quick. Damn it. Let me just grab this. Beautiful. Here we go. Clear that out. Run. All right, so I've just adjusted a few things. Let's see how well this goes, right? And seeing if we're able to get our strat to perform a bit better based off what we're doing, you know? Yeah, no. And if y'all do have any questions, please let me know. What we're doing right now, some of it is trial and error, right? Because I am building a strategy live. It's not like I'm coming with the strategy already built saying, hey, here's our strategy, let's do it. No, we are building it live. So some of this is trial and error, right? There's going to be some times where this works, 44%. So I got one put to win. Okay. And there's other times where it's just going to crash and burn, right? You know what I'm thinking? Let me try this with QQQ real quick. I know this is a completely different asset, but QQQ is the top 100 tech companies within the New York Stock Exchange. And I think QQQ is a little bit more, I know QQQ is a lot more volatile than SPY. So I want to see if I switch up the asset and go from, matter of fact, let's go here because let me just grab the QQQ data and let me just show it where to go get QQQ from. Where are you? QQQ. And then QQQ backtest. So QQQ is the top 100 tech companies within the new NASDAQ, right? So these are companies like Microsoft, YouTube, Google, Meta or Facebook, Netflix, right? Pepsi. What am I doing? Beautiful. Let's update to run backtest on QQQ and not SPY and gauge results. See this backtest to see the path, then let's update. All right, beautiful. Now it's going to see the path. Now it's going to update it. It's literally just a one-line change. And then once it changes the backtest, once it changes to QQQ, then we're going to test it on QQQ to see how well the this strategy works. Because I think it may perform a little bit better on QQQ. SPY is a little bit more diverse, right? It's not as volatile or tech heavy. Beautiful. With these squeezes. So let's see. All right, running it on 2024. QQQ has a little bit more data, right? Instead of the 10 million, it's 23 million, right? It's still going to run as fast, but it's still going to take us maybe an extra minute or so in order to load 23 million rows of data into an environment so we can actually run our back test. So if y'all do have any questions while we're running this, let me know. I feel like I'm committed at this point in order to find it. And we are, and this is going to work out for us, right? So let's stay to it. Here we go. Here we go. Right. So all right, here we go. We're almost there. All right. And she's off. Oh, snap. Literally. All right. So this is what I'm going to do. This is going to be a great stopping point. Reason being so is because again, there's going to be days when strategies just don't work out, right? And it's just shit is not panning out right now, right? So I'm not going to force it. I'm not going to make this work when it's clearly not. And there's a couple of things that I need to look at to figure out like why these strategies aren't working. So again, if you haven't already, please make sure to like and subscribe. It is your boy Kreative. I will be back at this again, and don't worry, I will do better next time. Type shit. Again, sometimes shit just doesn't work out for us, right? And I can appreciate that. Y'all say this live, like I built this live and it just didn't work out. So I'm gonna go back to the drawing board and being able to see what addition that we can create for mean reversion, because I really want to tackle that, because I think that can be a strategy that really works out beneficial for us, but we just have to just go back to the drawing board with that, and I'm okay with it. So again, this is what I'm going to do. I'll be back probably tomorrow to be able to paper trade our bots with us. So I do have strategies that work, and I do have bots that are profitable and are doing very well. So this is just another phase for us just to be able to keep creating bots, right? But again, I do appreciate y'all for stopping by. I do appreciate y'all for being able to check out the video. If you do have any questions, please let me know. Other than that, have a wonderful night or evening or day, whichever part of the globe you are at. GD, I appreciate you. Have a wonderful one. For everybody that is viewing here, if you haven't already, please make sure you like the video and you subscribe. Y'all have a great one. It's your boy Kreative.